New insights this week into the state of the consumer. Retail sales blowing past estimates and Walmart posting better than expected results after yesterday's 6% gain. It's now the best performing retailer in the S&P 500. But we also saw Starbucks abruptly replace its CEO this week, in large part because it's been having trouble with the consumer. Joining us now to talk about all of this, Greg Portell, Kearney Global Markets Lead Partner. Good morning, Greg.
Good morning.
So let's just start with the top line issue here. Is the consumer dead? Is the consumer alive? What's going on with the consumer?
We've been talking about the consumer's death for a long time now, and yet they continue to surprise us quarter after quarter. The consumer, particularly the U.S. consumer, has been incredibly resilient, but that doesn't mean they're not under stress, and it doesn't mean that they're not being very selective about how they spend their money.
Okay, and Greg, when you look ahead, can the consumer keep up these kind of strong numbers?
Well, we're tracking consumer stress, and the two largest components into that consumer stress index are the economy and the way that consumers feel the economics, and geopolitical issues, both of which are intensifying as we go into the back half of the year. So the U.S. consumer, and actually the global consumers, are under enormous pressure, and that's going to make management teams have to be very smart how they connect with them.
Greg,
it'll be very difficult going forward.
I was talking to the CEO of a manufacturer here in the United States, and he said to me, oh, just forget the next 6 months because it's the presidential election season. Do you see any connection between the level of consumer spending either way and a presidential election season?
The consumer spending is going to be there, but we would expect the holiday season to be positive. Now, what's interesting is this particular election cycle is going to be nasty, and that's going to play into consumer psyche, and it's going to play into where they spend their money, because they're going to be looking for those comforts rather than the extravagances.
Melissa and I this morning at 6 a.m., which was like yesterday, came up with 3 reasons why Walmart's doing well. Melissa, you had 2 of them.
Which is a stealing share.
That was mine, stealing share from Target. And you had 2 others. One was the consumer.
I don't remember what they were.
The consumer
is challenged.
And ending up at Walmart.
They're stepping down.
Right.
Step down.
Well, go to those 2 reasons, Greg. What's the reason why Walmart did so well?
Really 2 things. We've seen every management team, regardless of industry, really put inflation management tools in place, cost cutting. Walmart has a system to do that better than most companies. So when you look at their ability to really take cost out of the system and thereby pass it on to the consumers, they have a track record of being able to do it, and you see it in the results.
When Kamala Harris talks about price gouging in the food business, what are margins like in the food business right now? Is there evidence of gouging in those margins?
It's hard to say gouging. I mean, it's very difficult for food companies to take cost out of their supply chain, particularly when they're faced with sustainability pressures and the commitments they've made on that front. I mean, even if you take a company like Starbucks, the cost of coffee globally is going to continue to rise. And the flexibility that food companies have to take cost out when those commodities are going up is really difficult. So it's not so much that there's gouging, it's just there's limited opportunity for those companies to take cost out unless they change formula, change pack size, and that's what we're seeing with some of those value meals in the restaurant channel.
Right. Real quick, is the problem then at the manufacturing level, and there's not much the consumer-facing companies can do, but there are some perhaps companies with price-setting power at the manufacturing level?
It's not so much the price setting, it's the flexibility in how they manufacture. If you can create ingredient flexibility, formulation flexibility, that allows you to get more price variability and then pass it on to the consumer. So it's a flexibility and agility question more than a pure manufacturing question.